The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block. What's that voice you're hearing? This is not the normal deep baritone voice masking extremely feminine qualities that you're used to hearing opening the show. No, it's a higher voice masking feminine qualities that you're hearing. That's right. It is Mark Sebastian, a.k.a. Seabass. I am here hosting the Option Block. There was such demand for me to do the show. I actually told Mark, hey, you know what? Hit the bricks. The people want me. I'm here to host. So with that, you've got good old Mark, the greasy meatball Sebastian, sometimes called that. Others call me the love god, and either is fine. With me, as always, is my favorite large and in charge member of Know Your Options, Inc., Mike Tosaw. How's it going,
Always
Mike?
Excited to be here. Oh, and I'm glad I'm your favorite. I'm gonna have to write that down on our bulletin board at work at the office. Tosaw, Sebastian's favorite.
Being my favorite at KYO is kind of like being the best snow skier in Iowa. It's not. Joining us from OX is Tim, the ladies' man, Navabi. Although ladies' man no more, I understand. Tim,
yeah, Mark.
Tim, the betrothed Navabi. I believe to tell you.
Hi, Mark. How are you? Nice to talk to you. Yeah, we haven't been on the show for a while. I did listen to your volatility views. I really liked that. That was a real nice show.
Well, thank you. I'm glad you like the show. I enjoy doing it. And you get a bonus taste of Option Pit today. You get an extra healthy helping of Option Pit because ATG, Andrew Giovinazzi, the most evil financier in the state of Maine, Andrew Giovinazzi joining us.
I just kicked a protester off my front yard.
That's great.
The guy was walking around with a sign in a fake lobster costume, and I said, dude, you're just a joke. You got to go home now. So he was actually looking for food, and I told him he can't have any. So he put his lobster tail between his legs, and he walked home.
Nice. You said there's no such thing as a free lunch is what you told him, right?
Not here at the Giovinazzi pad. Only friends and colleagues. Everybody else, you pay.
So with that, let's roll right into the trading block.
The Trading Block.
And welcome to the Trading Block. This is the part where Mark Longo explains to you what section of the show this is. By now, you should know it. So we've got, we're filming this about 20 minutes to the close. Right now, the SPOOs are down about 10. We've got the NASDAQ off 30 and the Dow off 55. Mike, what do you think of today?
Well, I'm looking at this, and we came down, but we're starting to come back. Buyers look like they're starting to come in a little bit towards the close. So I'm going to be watching eagerly these last 20 minutes. And if you hear some bodies flying around, this might be a little bit scary as to what's happening going into the close. But I'm definitely watching this intently.
Yeah, I mean, I think I'm actually surprised we're moving at all. I thought that the entire market would be basically on hold until tomorrow, right? I mean, Andrew, Tim, what are your thoughts? I mean, this is just nothing compared to what's going to happen tomorrow, right?
Well, yeah, unless the number is, everybody goes, oh, it's the number and it's not that bad, and then we rally again. But yeah, you would think everybody would wait, but maybe they're just doing a little scoop in here.
Yeah.
Everything is kind of just bouncing around. VIX is getting softer.
Yeah.
Market's bouncing. All the financials are starting to lift off because they were actually getting pretty shellac-oled here relative to everything else, and they're coming back a little bit more.
Well, an interesting thing going on is bond yields are up at the same time the market's down. So we got bonds down and the market down and the VIX softening. I mean, does that point toward the number maybe being a little? I'm contending that in line at this point, they've sandbagged expectations so bad tomorrow that I think that in line is going to be considered a win, and we might get a rally out of that.
Yeah, how many days have we been down this week and how many up?
I want to say it's 50-50, right?
Right, so that we're probably due for an update tomorrow. Doesn't it feel like, okay, today we're up, news is great, oh, news is bad, now we're down, oh, now we're up again because news is okay, oh, now we're down again, now we're worried about the number.
Yeah, except we're not going anywhere.
Yep.
I'll tell you, short premium has worked extremely well the last couple of weeks.
I know, which makes me want to start to lift some of it off, I'm thinking.
Yeah.
Just thinking out loud a little bit.
I closed out some calls earlier today across the board.
Did you short calls?
Yeah, I closed out some short premium on some underlyings and a couple of credit spreads too. So I think that it's just at a stage where like this pullback, because vol's low enough to where you can get out of a lot. I got out of a lot of things for the just different underlyings with the equivalent for like 5 and 10 cents. Folks, this is a time when if you can get out of something that's some type of short premium for a small price, now I think is a great time to do it because of the fact that if the number, let's say you're in a bullish position, if the number's bad, what are you missing out on? You're missing out on 5 or 10 cents of your short premium. But if the number's great and then your underlying, let's just say it's a covered call, for example, if your underlying goes through the roof tomorrow and you no longer have that covered call standing in the way like you do right now, then you're a genius. And this is an opportunity to get out of some short premium, I think, right before when you have non-farm coming out the next day, or if it was an earnings announcement or anything, if you have very inexpensive short premium on the table, that's a golden opportunity in my mind.
Couldn't agree. And actually, an interesting thing's been happening. I'm sure you guys talked about this, but VIX option volatility completely smoked. You've got the VIX future, the May future now trading basically on top of the cash. I've actually been in favor, very rarely I'm in favor of this, but I'd actually be in favor of dumping your short premium, buy it all back, and moving into maybe some long VIX calls or like a VIX 18, 17 strangle, something that gives you a little downside. We saw VIX 30-day IV down at like 80 at a certain point. It's now up 5 points from the low today. So that's the one area where we're seeing a little price action is that we've got traders buying volatility on the VIX. So that actually might be kind of an interesting play into tomorrow's number. Buy back your premium and buy back your, trade some VIX against it. Obviously, people are hearing this tomorrow, so going to be a little late from that. But the one thing I would say is when you catch the show, the number will be out and the market will have made its move. If you can get out ahead of the VIX, we're going to have a very good opportunity to trade directionally coming off of the news of this employment report. All right. The last employment report was kind of bad. We sold off for 3 weeks. All the other ones had all been good. We rallied for 3 months. We get another one that's kind of good. We could rally all month. We get one that's bad. That's a great opportunity to buy some calls in the VIX. We could run right back up to 20 or 21%. And with IV's not that bad, that might be a way to play the vol without even without killing kind of the alpha of your portfolio. That's something that I kind of like right now. Tim, what are you hearing from anything going on your desk? You hearing a lot of Apple or anything? What are you hearing? Apple and Amazon, I'm guessing.
No, not so much anymore. A lot of people were, just playing any kind of recent earnings, and some of the other things that, as far as calls that, we're getting on, it's COP. We have all of these adjusted options. So everyone's calling up and saying, I don't see any volume on the COP options. What's going on there? So it's, again, just kind of an explanation about, that they have adjusted options. Now they have some PSX. So those were some of the calls. As far as like a lot of the activity, we are getting, give me 1 minute here real quick, as far as most active at OX. We had some people in HLF, right?
Yeah, we're going to talk about that one in the odd block.
Yeah. So yeah, a lot of cleanup there. Some of the other most actives here at OX. Yeah. Well, yeah, Apple is up there. Apple's up there. GMCR was another big one.
Well, it's getting destroyed.
I spoke to a couple of people this morning who, before the open, were ready to exercise their puts. And I was saying, what's your whole point there? Well, I want to profit. Well, okay, I just try to let them talk as much as I can, and they really just stopped because they didn't know what else to say.
Yeah.
So, it was a lot of pointing people to the pricer and saying, look, before the market opens, you want to try to figure out where these things are going to be at. Let's use the option pricer, and at least you can throw in an order.
Oh, that's nice. Yeah, well, obviously the reason why you'd exercise the in-the-money put is to because then you can collect some short interest which is what, 0.25% or something like that right now. But that would be why you do something like that. But you guys watching anything on the commodity front? Gold. What's been going on with gold, guys?
Yeah, gold smacked around. I thought it was pretty interesting today. At one point you had the market down pretty big. You had gold down pretty big. A lot of the headlines were, no cut in the ECB. So it was kind of a head scratcher.
No cut in the ECB sounds like a rap song, doesn't it?
Got no cut in the ECB. And the LBC.
More than copper. More than gold, it's copper. Copper's down even more.
Scorched.
Natural gas. I'm curious what Andrew has to say about that. I kind of have a feeling.
Yeah, well,
I know what he's going to say, and I kind of agree with him. But yeah, it's now it's just the markets always do what everyone does, exactly what everyone think it's going to do. So people who were getting long natural gas, now they're trying to get shorts, and then they're getting smacked on this side. So just a kind of a different difficult environment as far as trying to trade commodities these days.
Couldn't agree more. Yeah, it's been a rough one. Oil getting beaten. Nat gas up. What was
the oil number? It's just the inventory number was too big.
Yeah,
it looked like that looks just a little too big.
Inventory number was huge, and the nat gas number was down, huh?
I guess they didn't expand. They didn't have too much natural gas. They only have some too much natural gas.
Yeah, and I keep saying, if they're going to keep oil over 100, natural gas is going to quickly replace it. Natural gas is now at a level where it's starting to replace coal as an energy, and because it's that cheap, we get natural gas replacing. Pretty soon we'll have compressed natural gas for cars. It makes sense. You find a really cheap resource like natural gas, and people are going to use it, and as they should. So anything else in specifically you guys are seeing? Banks are, some of the banks are doing well, and I'm interested in the fact that we've got the market down, bonds down, gold down, oil down, natural gas up. It's a really odd market today, and the VIX barely reacting, underperforming.
You know what today is? Today's Bizarro Day. Let's just call it Bizarro Day.
I think the number. I think we're going to bounce on the number tomorrow.
And KYO is buying their short calls back. Everything today is Wackatola.
Well, that picks up initially this morning. But no, I mean, I'm just smelling that the number is going to come in 160, 170, a little better than people are expecting. And we're going to get a 14, 15 point rally off of that. So with that, let's close out the trading block and roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Well, and I don't have any specific odd block, but I wanted to talk specifically about two companies, and that's HLF. That it's funny. Last Tuesday, this really started, right? And Tuesday, Wednesday, Thursday, this whole disaster started. You guys wrapped up the show on the 30th, and since that time, HLF has gone from 70 to 46. So kind of an interesting trade. What are your guys, Mike, what have you told? Did you have anybody and OX and Tim, have you talked to any guys about HLF? What are you folks hearing about HLF?
Well, I mean, we're just trying to hold our customers' hands, really. There were a couple people that just really got hurt on that, of course. And then, you have some other people who kind of jumped in, a couple days ago thinking, oh, okay, this is great, great opportunity. And they were wrong again. So it's just a lot of, account damage control, really, that we're trying to take care of. It made a 52-week high and low in the same week.
Oh, that's incredible. I didn't even put that together. That is incredible.
That's a gamma scalper's dream right there, huh?
It is. But how often do you hear about something like that? Have you ever heard of that, Andrew? 52-week high and 52-week low in the same trading week.
I think this is that's a first for me. That's a first for an old guy. Yep.
It is. It's Bizarro Day,
it is Bizarro Day.
Do
not look at the man behind the curtain.
Yeah, and the funny thing is, I was trying to show my students how stupid it is to, once volatility's exploded, how stupid it is to go in and buy puts, and this stock keeps proving me wrong because every time I buy a put, the stock just goes lower. I'm like, would you stop going down so I can be proven wrong?
Right, yeah. Stock is moving $10 a day.
Stop making me money.
It makes no sense. Yeah, it's trading at the lows of the day. That's actually one of the few stocks that is trading at its lows of the day.
Yeah, it's just a terrible, terrible stock. And folks that are owning this still, that are sitting there saying, I'll hold on, I'm just, based on how this thing is trading, it's going to be into the 30s by the end of the week, I think. And you will please take the loss, wait 30 days. I'm sure in 30 days you will not have lost that much. Take the tax write-off against all of your SPX gains on the year. Okay? And call it a day on HLF. Tim, Mike, thoughts on if you had a client that Mike, here's a good question for you.
One word. Einhorn. Yeah. Who fades Einhorn?
Nope. Yeah, Mike, if you had a client that had owned this and called you up and said, Mike, he's self-managed, he's half self-managed, half managed by you. I know you guys have clients like that, correct?
Yes.
All right. So, and he tells you, Mike, I'm long 1,000 shares of HLF here from $65. What advice would you give him?
First thing I'd ask is 1,000 shares a big section of your net worth? And if it's like, no, it's just my fund money, then I'd say, well, have a hunch, bet a bunch, have fun with it. But then let's say that if it was a significant holding for them, then I think you're right. I think it makes sense most of the time to actually take the tax loss on it, just because of the fact that a lot of times when stocks get pounded like this, either they're going to go down a lot further, or a lot of times, at least from my years in the business, they're going to stay sideways for a while. Mm-hmm. And if that's the case, then like you said, you're probably not going to miss much by getting back in after 30 days. And for those of you home gamers out there, to quote Sebastian's mentor, Jim Cramer, the 30-day rule is because of the wash sale. So that way you can take the tax loss on it.
My mentor, Jim Cramer.
So, yeah, I agree. It's most of the time when you get a stock like this, it either has a long way to go down further, or it's probably going to stay sideways. Usually now, if it's something that just goes down a small pullback, yeah, buy the dip. I'm all for that. But this is more than a dip. This is, I don't even know what analogy to use. Sebastian can probably come up. Yeah. So get out. Steve Miller time. Take the money and run.
I confer. I concur and confer.
I was incorrect about the 52-week high and low in the same week, but it was awfully close.
It was in a week. It was not
in a week period, right?
Yeah. All right. Now the other major offender here is Green Mountain. And Andrew, I think you made a great point about Green Mountain yesterday. You were mentioning how it always beats the straddle. And why don't you give us kind of your thoughts on Green Mountain?
Well, yesterday, again, the straddle was priced at $7 in there. And we have had how many now, Mark, have we seen earnings in these big names where the straddles, where they just annihilate the straddle value? I mean, Apple, Priceline, Green Mountain, CRM. Any way, shape, or form. What's weird is somehow things have gotten sort of, I almost think like they've been, they're like over-evaluated prior to earnings, and they kind of forget how these names are so widely followed. People are really jamming into them like it's the only game in town on earnings. And just for whatever reason recently, all the big name momentum stocks have been having gigantic swings. So, you have a $7 straddle in Green Mountain Coffee Roaster that opens up 20-something bucks. I mean, that's a huge... Crazy. That's a huge win. Everybody's like, oh, you can't buy premium into earnings. And well, you know what? Sometimes you can.
Goldman Sachs actually ran a study. And, their main thing was using options, being right on direction is obviously the best. The worst performer out of all types of earnings plays. All right. And this is I'm going to burst a huge bubble of the independent retail trading community. All right. The biggest underperformer from a earnings perspective was delta neutral short vol, just because when the way things trade, things are going slightly below their straddle or to the straddle, or just absolutely crushing it. I have not seen a lot of straddles that missed by that underperformed by much more than 10 or 12%. And I've seen many straddles outperform by 200 to 300%. The risk reward in long premium versus short premium is not there. Have you guys heard anything else on Green Mountain? You guys have any guys that were, my mom loves those little mini Green Mountain things. She does. I think she's going to be disappointed that when Green Mountain has to sell themselves to Starbucks or something like that, but...
Starbucks doesn't want the debt.
Yeah, no kidding. Have you, Tim? You heard anything on the desk on this one? And
definitely. A lot of people were taking a shot at it. It was interesting because some of the people that I talked to that own some of those puts, it was their only winning position, their only position making money. They were a little shocked. The people that got it wrong. Well, they got it wrong. I mean, I don't know what else to say, and I always tell them, are you okay with, with the loss that you have right now, or are you still a believer in the stock? And if your answer is no, then why do you own this? Get out. But the one thing, Mark, I wanted to just jump back to you real quick. You said I'm kind of going to burst the bubble of the retail trader here, and you said Delta. The worst trade was Delta neutral,
short premium.
Short premium.
Yeah, short volatility.
Short vol, right. I just wanted you, can you say that sort of in a retail perspective?
Selling condors and butterflies and straddles into an earnings statistically underperforms every other type of earnings play you can put on into an earnings. You'll like this story. So I was talking to a guy, pretty nice guy, all right? And I was just talking to him about kind of what we do. And he basically, here's what he says to me. He goes, I just sell strangles on stocks that are about to have their earnings. He goes, I'm going to sell like this Apple, weekly. It was the Apple weekly 500, 580 strangle. What's wrong with that? And my answer was not within my risk profile. Well, I spoke to him a week later, and he was saying that he was taking a break from trading because an Apple was trading 630. You can catch what you think is lightning in a bottle on those strangles. Eventually, they will crush you. Condors, much the same, and butterflies and straddles, just none of those win. They don't in the long run.
What about, as you were also mentioning, just being long premium? I mean, because that's something that we see a lot.
Yeah,
and then we get the phone call, earnings were good, stocks up, my call's losing money.
Yeah, so, being long premium, in order of losers,
gotcha.
It was the winner was being right on direction and long premium, and being long premium and being non-directional. So long straddle, long strangle. That lost money over time, but not nearly as badly as those that were short. And actually, I have the study. So if people want to email me, mark@optionpit.com, I'm happy to I'll be happy to send you the study that I have on file. It's actually very interesting.
Yeah, it's not surprising because when you think about if I'm personally going to do a condor, I'm going to do it on something that I don't think is going to move a lot. And granted, it is mighty tempting to look at those premiums right before an earnings announcement, thinking, "Oh, I can sell this credit spread so far out of the money. What are the odds of this actually going against me?" Eventually, it's going to bite, and it's like I remember there's a story someone told me once saying, "Well, I did really good in my portfolio." But in 2008, I lost a lot of money, but from selling puts. But who could have possibly predicted what happened in 2008? And then the comeback is always the person who bought those puts from you.
Exactly.
So it's going to bite you at some point. If you're doing a condor on something you don't think is going to move a lot, then you have the ability to manage risk, neutralize your, and then just adjust your deltas. And you can do things like that to adjust the trade and work it so you can still get that time decay. But on earnings announcement, that stuff happens when the market's not trading, and you don't get to do anything except sit and pray as you're watching your Options Express after hours quotes.
Mm-hmm. Exactly. That's a great point, Mike. It's a great point. All right, and we've got a couple of two earnings plays that I wanted to talk about in this block. I thought would be interesting. We've got LinkedIn that's about to come out here. We saw there was a lot of activity on upside weekly calls. We had 6,700 of the 115 calls, 5,000 of 110s, the 120s, the 125s, and the 130s, all trading. A lot of them buyers.
Wow.
Kind of interesting. What do you guys think about? We'll know here in a minute, and then on the other side, we saw First Solar, which is basically everybody's punching bag, and they've got earnings coming out, rally back to almost unchanged on the day, and we're seeing big activity on long premium there. We've got big buyers of, puts on the 17 strike, the 18 strike, and then it looks like we've got call sellers on the 19s, 20s, and 21s. Doesn't bode well for the stock. Right? You know what? Take a guess at what the at-the-money IV is on the at-the-money straddle that expires tomorrow, Andrew, without looking.
Not looking. I'm going to say in the weeklies that expire tomorrow.
Yeah,
225.
300. Incredible. I mean, just incredible. So we got a couple of really interesting plays coming out after hours. It'll be fun to kind of see what those do in the morning.
Yeah, and I've got around, what do you have? I see the straddle price is 233.
Yeah, just increíble.
That's pretty big.
Yep.
Because they already hate the stock, and that's not a small amount for this thing.
No.
They're expecting just awful.
Not on any level. So, all right. And with that, let's roll out of the odd block and lead right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And this is the Express Block. This is the section of the show where Tim Navabi, a.k.a. King OX, he's going to tell us what's going on at OX. Have at it, Tim.
All right, Mark. Thank you very much. I appreciate that intro.
You're welcome. I appreciate giving you that intro.
I think you're doing a real good job on the show. It's nice. Anyways. What's going on at OX? I gave you some discussion earlier, pretty much about what we're seeing. And a lot of it, I like to always approach this segment as, your broker is going to give you some hints, the broker doesn't know the answer on where the stock is going or what you should do, but the best thing you can do is to sort of use the broker as a tool. And a lot of roadblocks I see with people and their accounts, they're just not getting all of the information before they talk to the broker, or they essentially have their mind set up and then they talk to the broker. None of those things help. The broker is essentially, there to assist you, help you things that you don't understand. If you, have your mindset that, you're not getting out of those HLF calls, then, why ask, what are you thinking? Or what, should I do? We are, a self-directed firm. Really, this is, all decisions are made by you. We don't give recommendations. So, when people always say, what do you think? I'll say, well, how do you like losing that amount of money? Well, I don't. Well, then why do you own this? Same thing with, calling up and, not having all of the information in front of you. A lot of times people will call up and they'll say, oh, there's something wrong with my balance. And I'll say, okay, where do you see that? And, oh, I see that on my position page. Well, that's not a balance page. If you want to know about your balances, go right to the balance page. It's got every line item that you can possibly think of that is going to affect your balance. And, finally, it's like the adjusted options that I was talking about. A lot of people will be calling up and just, again, saying, something happened to my options. I don't know what, there's no action. And some of them are interested in learning or listening, and some just refuse. If you're not going to listen to what the broker has to say, again, sort of, why are you making the phone call in the first place? This happens often where, a company has an event, distribution, an acquisition, a spinoff, and essentially, the company is not the same as it was. So the options that you had, they're not the same options. A lot of times the smartest people, the people that I always work well with on these types of phone calls, they could have small accounts or very large size accounts. And the first thing they'll do is say, okay, I'm just going to get out of these adjusted options and go right back into, the regular ones. Instead of sort of fighting, the thought of what are these, I'm not going to go to the OCC and look at the memo. I'm not going to calculate the new underlying. All of those have an effect on the price of the adjusted option. So, pretty much, again, sort of use us to help you, not, don't call us to fight us or not necessarily use the word fight, but, don't call us just to disagree with what we have to say. Call up and have, all of the information and questions that you need and be ready to move around on your account.
All right,
So,
Tim.
Yeah.
All right, and with that, let us close out of the OX block and roll right into the strategy block.
The strategy block.
And welcome to the strategy block. This is where Mike talks.
With an intro like that, you gotta love that.
This is where Mike says something ultimately very profound and large.
This is where Mike says something that you should listen to. Now,
He complains about making too much money in Apple, and his clients are screaming at him. Stop making us all this money in Apple.
All right. Strategy. If the defense is blitzing you, get the ball out of there quick. Run hot protection to the left. Oh, wait, wrong sport. I want to just tell a story from last August when the market was going down quite a bit. And we have a concept at Know Your Options we call the simulated index concept. I've talked about this before on the show where, let's say someone wanted to invest $100,000 and have stock market exposure with $100,000. And what we would do, kind of one of a protective strategy that we would do, is we would take between 80 and 90,000 of it, put it into something that we deem as safe, whether it's fixed income, whether it's something very tightly collared, whatever the case may be, something that for the client's risk profile is safe. And then with the $10,000 to $20,000, we would do a diagonal call spread on SPY or SPX, just depending on the client's account. If it's an IRA or if it's a smaller account, maybe SPY. If it's a larger account and it's not an IRA, then maybe SPX, whatever the case may be. Last August, the market started going down quite a bit. And when you're in a situation like that, I don't care how good you are, you're not going to make money on a diagonal call spread. So what we decided to do, and I don't do this very often, but we actually pulled the plug on the diagonal call spread. Now, with that, you might say, well, wait a second, Mike, then if you're trying to have a long-term bullish position, you took away the catalyst, which makes the position bullish. So how can you justify that? Well, this is what we did. When the stock is at a level to where you feel uncomfortable, number one, if you think it's going to go down, but over the longer period of time, you still want to have bullish exposure, that was kind of a conundrum that we were in. This is how we handled it. Drew a line in the sand. Now, keep in mind, we didn't just randomly throw a dart at a board. This was done with a lot of analysis of the market as a whole and a lot of different things. But after our analysis, we drew a line in the sand and said, okay, so long as the market stays below this level, we're just going to stay out of this diagonal call spread. And if the market stays below it, then we're not missing out on anything. However, the gamble that you take when you're doing something like that is that the market's going to come right back up the second you get out of it, and you're going to get back in and you're chasing the market and you're playing, quite frankly, a losing game. This is how we justified it. Number one, we got out and we believed that if the market does come back to a certain level, we would get back into it and we would admit our mistakes and we would, admit we were wrong and be honorable traders, so to speak, if there is such a thing in this world. But why can we justify it? Here's why. At that stage in August, because of the fact that the market was going down at such a rapid rate, implied volatility was fairly high. And so because of that, we really didn't get bit too badly on the diagonal call spread. Now, granted, we were in a losing position on it, no doubt about it, but we didn't get bit too badly. As the market would come up, we believed that implied volatility would come back down because of the fact that it was so choppy in August, and that was back when our country was going to go bankrupt, and that was the latest edition of the world that was going to end. If the market were to come back, then we believed that implied volatility would come down, and the loss that we would take if we were wrong would not be significant enough to where it would harm the portfolio. However, if the market continued to free fall, then we were out of it, and we obviously weren't missing anything. So my point is that you need to weigh the risk reward of every decision that you make. How does this hurt us if we're wrong? How does this benefit us if we're right? Now, ultimately what happened was the market did continue to go down further, but then it kind of leveled off a little bit, and then we got back in at a lower level. We didn't actually gain anything on it. We gained a couple of strike prices because we went in the money a little bit further for the same price. So I guess we gained deltas, and then we continued along our merry way, so to speak. But with that, had we been wrong, our analysis dictated that with volatility going down, the risk of making a decision like that was justified. So, is the risk justified in the decision that you're making with the trade you're making? That's something that you have to ask yourself for every trade.
Brilliant as always, Mike. Great work. And with that, let's roll out of the strategy block and into around the block.
Around the block.
And it is around the block time. That means we're going to say what we are looking at going forward. This should be pretty short because I believe it is going to be non-farm payrolls. And is there anything else you guys are watching for?
Curious to learn more about the Junior Seau investigation.
Oh, do you think that was I noticed he shot himself in the chest. You think it's another kind of Dave Duerson type of thing where he's wanted his head to be available for study?
Could be, because if there's, Junior Seau, I never met Junior Seau, but he had a reputation of just being the guy that you wanted to have on your football team. Obviously, he was one of the best to ever play the game, but normally, if they're like, let's say that they're just doing the punt team or they're just doing special teams, a lot of times what'll happen in an NFL practice is that the older guys will say, rookies, get out there to play on the scout team. Junior Seau wasn't like that. He was the best in the game. He would always go out there on his own because he just couldn't get enough football. He loved football that much. Mm-hmm. Did a lot of great things for his community, and it's sad that after 20 years of playing in the NFL, having fans cheering your name and just being the best, he didn't have that anymore, and apparently he just couldn't take it. And it's very sad. I loved Junior Seau.
Yeah, me too, and I'm really sorry. It's pretty sad. Anyway, aside from that sad story, it's an interesting story, by the way. If you're ever bored, read what's going on with this Sarah Phillips, who is a writer for ESPN. It's on Deadspin. I can't get enough of it. But before we go any further off the wagon,
sorry about that.
Yeah, Mike, what's going on at KYO?
Well, we're taking a break from the webinars again, probably for the next few weeks, and we had a ton of turnout. We're just very busy right now, and we're just focusing on working for the clients as best we can. So if you want to subscribe to our newsletter, go to knowyouroptionsinc.com, and love to have you subscribe to our newsletter. And then in time, we're going to get the webinars going again. But as for right now, we're very busy and doing everything we can to get geared up for the summer doldrums, as they say.
We've got here at Option Pit, we still are running our special, optionpit.com/bull. You can try Option Pit Live for $0.01 for 1 week and $39 for the rest of the month. That is really cheap for what you get out of us. And we're going to be doing another one in our series of weekly webinars on May 16th. So you can go to optionpit.com/events. And Tim, What is going on at OX?
I'll tell you that in just a minute, but I wanted to go back really quick when you were saying, what else are we looking at? No, I know, but kind of to go back with what you were saying, way at the start of the show, that, next week doesn't seem like a big news week, so, tomorrow could really set the trend for an entire week. So tomorrow is definitely a big number. Do you see anything next week that's anything going on next week? I really don't.
No, I don't. I think it's going to be a slow one. LinkedIn just came in beating forecasts. First Solar did not beat forecasts badly. Although they're saying they're raising guidance. I don't think that anybody on the street's going to believe that.
As far as what... Oh, so go ahead.
Oh, sorry. And yeah, you were saying as far as what's going on at OX.
Yeah, we do have a live event. That's on May 12th. It's in San Diego. It's from 8 a.m. to 3:30. You can find out more at optionsexpress.com. You can call the trading desk, if you don't have an account here, but you kind of want to go to the workshop. It is a free event. So, yeah, workshop in San Diego on the 12th.
All right, everybody. Well, that was a fun show. I enjoyed filling in for Mark Longo. Managed to get it done in under 50 minutes. And, I think this was a fun one, guys. It was great seeing everybody. You can follow me on Twitter at OptionPit. I'm 34 short of 2,000 right now. Everybody up to 2010 is going to be entered for a random drawing for an autographed copy of my book, The Option Traders Hedge Fund, which is currently rated very highly on Amazon for option books. Go out and buy the book. If not, I'll follow me on Twitter and I can send you a autographed copy. So on that note, I hope everybody has a wonderful weekend, and we'll see you next time on The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.